Okay, recording this video after close trade Thursday, 31st July 2014. Well, I'm having real difficulty recording this video because after a big down day like today, there's two things going on in trading land after hours. First of all, there are people that are ecstatic. They make good money today, and I got some great emails, people thanking me for saying that 1960 was a critical level, drop through that would take us into a big move. So they've made big money and they're happy. On the flip side, though, there are a bunch of people in a world of hurt right now because they've lost good money for whatever reason, trying to catch a falling knife, expecting the market to continue to break to new highs ad infinitum and so on, and they've been on the wrong side of this last move. And so I feel for you. What I would say is, first of all, we've all been there, certainly been there. It's days like today that forge good trading in the future. Days like today will form your character and your trading methodology. So you need to rethink what you were doing. Why did the market drop? I'm going to try and explain on my charts why I think that was the case, and it's all to do with dropping through support levels on high time frames. But it's worth revisiting what you're doing, your trading methodology, your decision making process, and understanding what's kind of going on. I'm going to show you one little email because I am an Uber bear and it's good to get one right in a while. This one's from Tony. As I traded the mini all the way down today, the image of Felix kept flashing through my head. Thanks again for the awesome indicators, Barry. Cheers, Tony. And this is Felix that Tony is talking about, Felix Baumgartner. After Tuesday's video, this was the splash screen, E-mini about to jump. So it was a nice move down. There have been plenty of bum calls, but this one kind of worked out nicely. So let me just go through my charts, show you what's going on in the higher time frames on these support levels, and why it's a critical kind of spot, and why this move was such a big move. Anyway, at the end of the day, we did 2.3 million contracts traded. It was down kind of 40 points from the close yesterday to the low today, so big damn move. And Tuesday I showed you this chart, which is the trend line chart showing areas of consolidation where we break into trend moves. So the last consolidation area, and these white bars showing consolidation between rising and falling trend lines, and we broke into this uptrend, and then we had another consolidation area here, bang, breaking into this downtrend. So that's what we're doing, breaking below significant kind of trend lines on this 135-minute chart. And then on Better X trend, which is another way of kind of measuring trend. Better X trend is a trailing stop based on exhaustion volume. So trend moves start with exhaustion buying, and end with exhaustion buying, and then downtrend moves start with exhaustion selling and end with exhaustion selling. So you see that volume coming in at the beginning and the end. Now on the NASDAQ, we haven't broken through support here. We've had one kind of decent down day and we kind of trended back up, but this is a big kind of trending move here, big down day. So we're about to break. I'd suggest tomorrow we'll probably break through this support. It is a critical level. I don't expect us to kind of bounce. I think we're going to continue down, but it'll be kind of after a big move today, we'll have a smaller type range, but look for this support level on the NASDAQ to kind of be broken, and that'd be kind of significant. So these moves start with exhaustion sell, and then they end with exhaustion sell, and then they get going with exhaustion buying and end with exhaustion buying. On the Dow, I was saying the other day that we've already started into this downtrend move with that break a couple of weeks ago, so big down day, and then we have come back into that region with another little sell bar here, and now we've kind of been catching up the last 2 days, big down days on the Dow. So the Dow's weaker than NASDAQ going on. This is the E-mini, same type of pattern with the S&P 500, but the E-mini chart is a little bit neater, so you can see the trailing stop, and then this is the activity kind of getting us going with these exhaustion sell, and now we've broken through that support level. We're into a downtrend on the Better X trend. Going to show you some higher time frame charts. This could be quite significant as a kind of a turning point kind of going forward. Now we're going into August, September, October is kind of critical in terms of usually being seasonally very weak for us, but it's just interesting on these higher time frame charts that we've formed some end of trend patterns. So this went off a couple of weeks ago with the NASDAQ on the weekly chart here, pullback to end of trend with a flush pattern kind of going on here, and you can see that coming into those highs, that left shoulder, we had all of these blue professional bars, particularly around here, and then the break to new highs was a Rambo pattern, which is just beautiful, a little signal up there, pull back to end of trend. I'm watching this in the back of my mind, but I'm being just circumspect about saying, it's all over Red Rover and we're going to, fall into downtrends. After you have a move like this, a left shoulder and a head kind of move, you go through a period of a lot of toing and froing backwards and forwards until we, break properly into a downtrend. So all we've seen today is a decent, kind of sell move. This isn't the beginning of the end. This is the beginning of a lot of toing and froing as we're trying to find this top and then, go into a reversal move. But anyway, it's just interesting on the Nasdaq that we formed that pullback to end of trend, and also on the Russell, the pullback to end of trend. Remember, the Russell and the Nasdaq were the strongest of the lot here. Now you can just see better momentum flatlined here, just because we have no volume for the Russell index. We just have price. But I'm just watching that in the back of my head. We've got these kind of weekly pullback to end of trends on those two indices, and I'm probably going to kick myself for showing you this chart. It's Apple, and I have a little bit of a bad history with Apple. Apple is such a strong trending stock. It's been an absolute, long-term play, and the people that have held on to this all the way, good for you, well done. It's just interesting that we have a triple pullback to end of trend on the daily, weekly, and the monthly chart. Now I'm just going to show you it, but let's not harp on about this. It's just interesting, and it's also at a critical level, $100. So what was the stock split for Apple? Was it 7-to-1, 8-to-1? I can't remember. But anyway, so $100, the previous high that we made on the monthly chart here, pullback to end of trend with Rambo patterns up there. And we're kind of coming off in terms of buying. On the daily chart, there's also a pullback to end of trend, blue professional up bar, and just overshot there, just because it's super strong. And on the weekly chart, it's pullback to dirty end of trend here around this level where we have pullback to end of trend. It's just interesting. I'm just going to leave it at that. We'll see what comes out when they release the iPhone 6 and whatever the next kind of significant data releases or information releases that come out of Apple. I'll just leave it at that. It's a triple end of trend. It's similar to these patterns on the weekly chart of the Nasdaq and the Russell. It's a curiosity. I'm not using them to trade necessarily, but it's interesting that they're happening in the background. All right, so why have we dropped through here? First of all, I'm going to show you the 40,500 tip bar chart, and this is the drop that I was talking about, 1960 as absolutely key. So on this higher time frame tip bar chart, we've done all of this exhaustion buy stuff, exhaustion buy, bearish divergence, flush patterns, and so on. We initially had a little bit of a rush, and we came back up. Last roll of the dice kind of up here, professionals getting short after our kind of trending move is over. And this is the weakness that we saw a few days ago, breaking through support here. And then we come back and we bounce off resistance. So when the next move, we break properly through a support level into a trending move. So this is an initial bounce. This is what I actually am calling in my own. I've not talked about this, but it's a low risk entry point where you initially have a support level that's broken, we come back up and we float back up to a resistance point and then just bounce off that and kind of move into a trend move. That tends to be a low risk entry point because we don't go past that resistance. And you see them on the flip side. If you have an initial break to the upside and then you come back and float off a support level, a break to the upside, that's a low risk entry point for a long trade. I have coded this, but I haven't done it on multiple time frames, and I think that would be kind of more interesting to get once you get one of these signals that's supported by a whole bunch of time frames kind of coming together. The signals are strong. But what we tend to do is we move in high or medium time frames. This is a high time frame. The 40,500 tip bar chart is a high time frame when I look at my 3 time frames on this highest level. We've broken through this into a trend move on the 40,500 tip bar chart. We've put an exhaustion down here. We've got to put in pullback to end of trend before this whole thing is over. So it's breaking through this high level tip frame support level. That's the reason why this has been a strong move. And don't forget, in the last several weeks we've just been moving through a tight kind of consolidation, well, relatively tight kind of consolidation, just waiting and waiting for that next kind of trend break. And that's what we got today with this weakness in the background, a low risk entry point, and we fall through that support, bang. Now the 40,500 tip chart is very similar to the 45-minute chart, and so you can kind of back it up again to even higher time frames. 45-minute chart, 135-minute chart, and the daily chart. And again, there's a factor of 3 going on between these time frames. 3 times 45 minutes gives you 135 minutes, and then 3 times 135 gives you, I think, 405 minutes, which is the number of minutes in a day session of the E-mini. So this is the break that we got. It's when you look at the day session only data, it's not as smooth as the tick bar charts. I like the tick bar charts because it gives you day and night and it all kind of smooths out. But you can see again, same deal. We've been moving through consolidation for a while. We get that weakness, sign of weakness, just like you got on the 40,500 tick bar chart. We float back up to a resistance level here. We don't even make it through the resistance level. We just bounce off that and then through into a trend move here. So we're in a trend move on the 45-minute chart. This has got to play itself out to pull back to end of trend. And that will be a trending move that syncs up with cyclical support on the daily chart. So that's what I'm going to be looking for this thing all to be over. It's big kind of exhaustion sell type signals. I don't think we're going to get another big day like this. It'll be kind of smaller range type days as we're finding that bottom, but that's what I'll be looking for. This thing will end when we get our support level on the daily chart coming in with pullback to end of trend on the 45-minute chart. And it's a nice little break through the 135-minute chart. So all of those things will probably have to come together. We'll have to have pullback to end of trend on these time frames, syncing up with that cyclical support on the daily chart before it's all over on the downside. And that's the reason why it's a big break, because it's a big break on the 40,500 tip bar chart, a high time frame tip bar chart, which is equivalent to this on the 45-minute chart. It's also through support on the 135-minute chart. And again, we've been bouncing off these support levels, and we go through, after a trending move, we go through a consolidation phase where the market's kind of getting rid of all that energy, that upside energy. We can't break through. We have a Rambo pattern at the top there, just showing no demand, lack of demand at that point, and then this thing sets off with an exhaustion sell and then breaks through support, bang, and now we've got to find our pullback to end of trend on this high time frame. So it's a big move because of these breaks of high time frame tick bar charts and support on like the 135-minute chart down to cyclical support. I must be sounding really depressed. I'm not depressed. I didn't get all of the move. I got the early part of the move in the overnight session. As soon as the European session kind of opened up super weak, we had a breakdown on the support levels, and I was in short at 59.75. Made 4 3/4 on the first trade, lost a quarter on the second, 2.5 on the third, break even on the fourth. And I was done after 4 trades for 7 points. So I was super happy, but there was a lot more in it, and I didn't decide to trade during the day session because I'd made good money before the open. So I'm not depressed today. I think there's more kind of money in it. I don't know. I just feel as if it was a nice call. It was a lucky call, but Jesus, there's plenty of bad calls I've made over the months. So thank you to all the emails with people saying thank you. They made good money on that. So good for you. Everybody else who is kind of licking their wounds today, have a good think about what you're doing. Anyway, so there we go. I've rambled on long enough. Hope you traded it well today.